In today's video, we're going to talk about one of the most important trading indicators. It is used by experienced traders as well as it is used by newbies that only started their journey in this field. Today's video is about MACD, that is also called Moving Average Convergence Divergence. Right now, put the video on pause, click the like button and don't forget about subscribing the channel not to miss the next video. This is Wealth Management, let's talk about crypto. Moving Average Convergence Divergence indicator is trading indicator that is showing the difference between exponential moving averages. To understand how the indicator works, you would need to know what are the components of this indicator. So let's take a look at a graphic to see how this indicator works.
The first thing that you would need to do is to find the proper indicator in the list of all indicators that are presented on TradingView. This is how MACD indicator looks like. The first component is the blue color line that you can see on the screen. This line is called MACD line. This is the difference between short-term exponential moving average and long-term moving average. Base settings for long-term moving average and short-term are 26 and 12 periods. At the same time, the second line that we have here had the all orange color. This is the sinus line. Sinus line is the exponential moving average created from MACD line that I explained before. So MACD line is additionally being smoothed, so it becomes more accurate, and that is why it is called the sinus line. Usually, the sinus line is used with lower period than moving averages that are used for MACD line. You can see that the base setting for this line is 9 period. Another thing that you can see from the indicator is histogram. This is just some kind of another way to show the difference between MACD line and the sinus line. You can see that when MACD line is under the sinus line and the blue line is under orange line, we can have the red bars on histogram. At the same time, when the blue line is crossing the sinus line and it is over the sinus line, we can see the green bars on histogram. In case you can see the green bars on histogram, that means that some asset is growing. In case you see the huge bars on histogram, that means that growing is dropping is really strong. For example, in this one case, you could open your position when you see the green bars on histogram, on MACD. For example, you decide to fix your profit when you see the first red bars. You could get more than 42% of profit with opening this trade. At the same time, when you think that Bitcoin could drop and you also see that MACD is showing red bars, that the opportunity for you to think about opening your short position. For example, you decide to close your trades once you see the first green bar. In this one case, you could get even more than 10% of profit on Bitcoin dropping, because Bitcoin price dropped for 10%, we had red bars on histogram, and for example, you decided to open short. You can fix your profit with the next green bar on candles on the histogram of MACD.
My advice for you is to compare different pairs of settings for MACD and compare different time frames like daily, weekly, 4 hours, and etc. to find out the better solution for you and to create your own trading strategy. If you would like to know what is my trading strategy and what indicators I use, I recommend you to check out our Discord channel. You can find out more about trading indicators that I use for my trades. You can test those indicators yourself and check what results you can get with using them for all the time. So check Discord for more information. The link will be available in the description under this video. Another way of using MACD for your trades could be with finding the divergence with the help of this indicator. You may already know what is the divergence, as I described the principles of its work in our video about RSI. As you could already know, the divergence is the difference between the trends on the price and indicator. So the divergence is when the price is rising, for example, but indicator is dropping, and at the same time the indicator may rise and the price may try to go down. Let's better take a look at the graphics to see how you could trade the divergence with the help of MACD.
When we are talking about the divergence, it is important to remember that there are two types of divergence: bearish and bullish. When we are talking about bullish divergence, you would need to take a look at minimums on the price and minimums on indicators. So, for example, we had in June 2021, we had lower price minimums. At the same time, we had higher minimums on indicator. In the final end, in case you decide to open long-term position after you saw this bullish divergence and, for example, fix your profits with the next red color bars on histogram, you could get even more than 66% profit. At the same time, when we are talking not about the bullish divergence but about the bearish, we are taking a look at not minimums as we had for the bullish divergence, we are taking a look at maximums on the price and maximums on indicators. As we had, for example, in April 2021, we had higher maximums on the price and lower maximums on indicators. In the final end, Bitcoin was corrected from its all-time highest level at that time to the level of $30,000 approximately. In case you decided to open your short position after seeing this bearish divergence, you could get even more than 53% of profit. The only warning to you is to make sure that you measured all the risks and include your risk management system in your trading strategy, because this is really important. It is really dangerous to open your trades against the trend, so please make sure that you measured all the risks.
I hope this video was useful for you. Push the like button, don't forget about subscribing to the channel not to miss the next video. Let us know in the comments what settings you used to use for MACD trades. This was Wealth Management channel. Wish you to have only profitable trades.